Welcome. In this clip, we're going to look at the salaries and dividends tab of the Compassheet model. Salaries and dividends tab, we can have up to 50 individual members of staff on here, each with their individual salaries, and we can also put in the dividends for the shareholders. So we're going to look at how we can quickly and simply add in the salaries for those individual staff and how that adds in for the 3 years. So we've got 5 members of staff set up here so far, and as an example, staff 1, 2, 3, 4, 5. What we can put in here is you can overtype any of these, so we can either give them individual names or we can give them job roles, whichever is easiest, or a combination of the two. When you add additional members of staff, simply put it in the blank boxes. So it might be sales admin 2, put the new salary in. The boxes here for year 2 and 3 is to put percentage increases in. If there are, if you want to model percentage increases in for year 2 and 3, if there's not going to be any increases, just put zeros in there. The salary is put in as an annual amount, just as an aid. That then calculates in this column here the monthly amount, which is simply the annual one divided by 12. By default, it assumes every member of staff is in the stakeholder scheme and applies the general stakeholder rates in there. If there's a member of staff who isn't in the stakeholder scheme, there's a drop-down box here where you can put a no in there. So it's a blank or a no. A blank, as it says in here, assumes that yes, they will be in the stakeholder scheme. The rates used in there are those in the tax assumptions tab. It's getting into a level of detail that generally for a forecast, if you're getting into whether it's a slight percentage on the tax holder scheme, makes a massive difference to your forecast. You have to get a balance here with the level of detail where the sales could be massively out, but your tax percentage is within a small tolerance. It's getting that balance right with the level of detail required for a forecast. But say that there's a drop-down tab there for the pension scheme. So put the staff in there. So by default, this will now populate the whole model with these salaries for every month, increasing every year. If these members of staff, say, aren't starting at the model, at the beginning of the model, or they're leaving partway through, or the salary increases aren't in line with the broad percentage, there's an override facility for each month. So if we just drop down the sheet, so what we have here is an assumption that staff member 4 doesn't start until June 2021. So what I've put in here is zeros for the first 6 months of the forecast. So what this will do is replace their salary with zeros for the first 6 months. And for staff member 5, we'll replace their default salary with zeros in the model for the first 12 months. What we could have is for staff member 4, they're being paid £3,000 a month. If they start in month 7 of the forecast but halfway through, instead of starting in June at full salary, they may start at half salary. So you can use this override if there's a particular month where they're getting a bonus. Again, you can override any month. So these are the override values. So if you drop down to what figures are actually being used in the forecast, so this is for year 1, and you can see the months across the top here. So the grey boxes are the ones that can't be changed, but these are the actual values used. So we see for staff member 4, there's no cost in there for December 20 to May 21, £1,500 for the June, which is the override value, and then it defaults to the £3,000 a month. And for staff member 5, it's in at zeros for that first year. So they're the figures used for year 1. If we drop down to year 2, put no override values in there, so this will just default to the year 1 plus the percentage that we used for year 2, which are these percentages here. So everybody's at 3% other than the sales admin that we've put in at zeros, who should remain at £1,500. So if we drop down to year 2, so there's no overrides. Year 2, everybody's on their year 1 figure plus the percentage other than the sales admin, which is still at the £1,500. So that's how you build the salaries up. The other facility in here is for dividends, which is at the bottom of the sheet. So this is where shareholders, often owner managers, who will be paid dividends as well as a small salary. So what we have here is an override box. So it's and you can put in here whichever month the dividends are paid. The model assumes the cash is paid the same month as you put the figure in the box. So typically you might have towards the end of the year, when you know how the business is done, you might put a dividend figure at the end here. And you can see that in the grey box, these are the figures that feed through to the model. Takes the £40,000 out of the reserves for that year, and we'll assume that that £40,000 is cash, but you can put these in whichever months you want. If there's a standard monthly or quarterly dividend, just put those figures in and this will feed through the model. So that's the overview of how to use the salaries and dividends tab on the Compassheet model.